The BSE Sensex and the Nifty 50 indices rose for the first time in 7 days yesterday as markets looked to stabilize after last week's blow. The indices, however, succumbed to the global doom in 2022 amid rising rates and hot inflation. The Nifty is nearing a bear market, having declined 17% from its lifetime peak. However, when compared with global peers, Indian markets have been resilient. According to Motilal Oswal Financial Services, the MSCI India Index has gained 7% in the past year, whereas the MSCI Emerging Market Index has corrected 22%. Analysts attribute this outperformance to the unshaken confidence of domestic investors. DIIs, for instance, have pumped in around 2.15 trillion rupees so far this year, as against FPI outflow of around 3 trillion rupees.
If you look at India as a market, we have seen this kind of inflation before also. And also the current inflation is not materially different. Even during the times of demonetization, the core inflation was at 5.2%. Now we are at 6.2, 6.3%. The challenges for the Western market are much more than Indian markets, right? So from that perspective, FIs are very, very pessimistic, and the domestic institutional investors or retail investors, they still are optimistic because we have gone through these kind of cycles before.
Kulkarni expects equity markets to reverse the current downbeat trend once the global turmoil settles.
My view is that corporate earnings are still going to be strong. Domestic investors are actually waiting for things to settle down on a global front. If, let's say, the war ends, that will help cool down the sentiments for crude, right? Then, of course, the inflation cycle already is there. We are seeing that there are interest rates being raised. Once that thing settles down, the macro narrative will shift to a micro narrative to what is happening in domestic companies. And that's when I think things can do very, very well.
Another silver lining is the attractive market valuation. At the end of May, the Nifty was at a 1-year forward price to earnings ratio of 18.7 times, down from 23 times seen in October 2021. The current valuation is a 4% discount to its 10-year average. According to Santosh Meena, head of research at Swastika InvestMart, markets often need trigger events to comply with universal law of mean reversion, and the Russia-Ukraine war is one such event this time. Meena recommends investors lap up stocks with good fundamentals and robust financials using the buy-on-dip strategy. That said, the risk of inflation continues to shadow near-term prospects. According to Kotak Institutional Equities, peaking of inflation could put a cap on bond yields and a floor on equity valuations. However, if inflation were to surprise on the upside, the already high yield gap may become more negative and likely result in a further correction in market multiples. Against this backdrop, the markets are likely to continue to be range-bound today given a lack of domestic triggers.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.